Hey, Bubby Trades! I want to do a video analysis update on the stocks we didn't cover yesterday. So we'll talk about Apple, the Nasdaq, Google, Amazon, and SPY. We'll talk about XLV, the healthcare ETF, Qualcomm, Micron, and Taiwan Semis. We'll talk about Intel and IWM, XHB, the Homebuilders, KBH Homebuilders, Oil Services ETF, OIH, Farmer Brothers Coffee, Gamestop and AMC, Pretium Resources and Pan American Silver, Nokia, Disney, Tesla, NextEra Energy, Enphase Energy, Solar ETF TAN, Twitter, and Litecoin, as well as Riot Blockchain. So let's get right into it. But before we do, I want to explain a little bit of my risk management strategy. I don't want anyone to think that I'm a reckless cowboy or that, I need the market to move a certain direction. Only short sellers need the market to move a certain direction. I don't. Okay. So one person said, a lot of people say this, that I'm steadfast in my analysis. I don't really change my bias very often. And that's because I don't need the market to move a certain direction. And a lot of the risk management is, for shareholdings, the stuff that we talk about, like diversification, taking smaller position sizes for more volatile stocks, stop losses, scaling in, protecting profits, all that stuff. But there's another more aggressive thing that I use to kind of protect myself from the downside. And the very short answer will give a very kind of simple one example of this is I use option straddles and option strangles to protect my portfolio from the downside. So I'll give one example of an option strangle that I entered this week. First, let's talk about why I thought the oil sector was going to have a big move. I still think the oil sector is going to have a crazy move because the options market is telling me so. Just this week, we saw Shell Gasoline, Chevron, Energy Transfer, and British Petroleum all very close to the bottom of their 52-week range. Occidental Petroleum, Oxy, was also near zero. So was the entire ETF XLE. So, the market right now is really telling us that the oil sector is going to have a big move. Now, there is no guarantee at all that this large move will be to the upside, okay? It could definitely be to the downside. I don't really care. This makes a good recipe potentially for an option straddle or strangle, but it's not as easy as it looks. So one thing that I also used as kind of evidence was that Occidental Petroleum, ExxonMobil, and Chevron have been on the bar chart straddle and strangle screener, which is kind of rare, but they have very liquid options markets. And this is kind of evidence that, I really think the oil sector is going to have a big move. So one thing that I did was I entered an option strangle on Kinder Morgan. So Kinder Morgan is an oil stock that usually lags the oil sector, and it certainly lags the stock market. But I entered an option strangle where the first leg, right? So each call was $145, and it was the 17 call that expired on January 20th of 2023. The delta was 51, the gamma was 10, and the theta was 0.0019. So each call was paired with a put. Okay, so the put was the January 20th, 2023 15 put for $145. So they were the same amount. The total lot size was $290. Now, for the put, the delta was 0.31, the gamma was 0.06, and the theta was 0.0024. So you'll notice that this call is a little more sensitive than the put, but generally, there's a skew a lot of times for options where the puts are a little more overpriced than the calls, okay? So the possible values, just to kind of give some estimates, let's say that this big move in the oil sector resolves to the upside, right? Well, that'd be great because by June, right, even with a very conservative no spike in implied volatility, which is very unlikely, I could see that the call lot is worth about $632, which is over a 100% return, right? This is on a neutral trade, a directionless trade. Now, let's say the stock market crashes. Let's say Monday morning, they announce a whole slew of lockdowns or something like that, or maybe there's a power outage or a blackout. I don't know, right? And the stock market starts plummeting. Well, then this KMI oil stock is going to get wrecked, right? KMI always or usually severely underperforms the Nasdaq, right? So if the Nasdaq and the market starts crashing, this oil stock is gonna get obliterated. So very conservatively, if we went down to 11.45, which is kind of the most recent major low for Kinder Morgan, the put could be worth over $400, given a spike of implied volatility to around 32%, which is really the mean distance between the 52-week high and the 52-week low. So the 52-week high was 44 for implied volatility. The 52-week low was 24 implied volatility. So I kind of, put in what a 32% spike in implied volatility to 32% may, cause the put to be worth. It looks like it'd be around at least 403. Now, I think that's pretty conservative for what a put on an oil stock would be that expires in, 8, 9, 10 months and the stock market was crashing. But the gist of it is that even if we went down, I would have kind of unlimited exposure to the downside if the stock market really was crashing. Now, I don't just use Kinder Morgan for this. I don't just use, the pot stocks. MJ were a good setup on this recently. The airline ETF Jets was a really good setup for this. ICLN was a really good setup for this. Sometimes I'll use a bias where I'm biased to the upside, but I'm using puts still, a little larger put position to protect my portfolio from the downside. But that's the really short answer of why and how, I'm not really always fretting about the market going down. It's because I have option strangles in my portfolio. So we can watch how I do. If you want to see, I'll be holding these. You can see the 15 strike put and the 17 strike call was $290 when I bought it. So, we'll see how I do, but just wanted to share that. Here's Apple. It's a wave 1 and a wave 2. We have a huge wave 3 to the 161.8% extension of wave 1. So this wave 3 target is 171. What I kind of explained recently is that this could be too conservative, and we'll talk about why in a little bit, but let's just talk about the most conservative view for Apple. This is a 1, 2, 3, 4, 5 waves impulse of a large degree wave 3. The length of wave 3 placed at the wave 4 low will take Apple to 171. That would end wave 3. We'd have a shallow wave 4 correction and go on a wave 5 higher. Wave 4, in my opinion, would be at least the length of wave 1 placed at the wave 4 low. All in all, I think Apple has a pretty conservative path to 200. I'm pretty confident this is going to get hit in the first half, even the first quarter of 2022. I think that this wave 5 higher is really going to pick up the pace. What I wanted to show is that Apple has severely lagged the Nasdaq. So the Nasdaq QQQ is up 33% from this same September high that the entire market formed in 2020. Well, if Apple was up 33% from this high, it would go all the way to 182. So Apple's got a lot of catching up to do. I think it holds this low. And honestly, if it goes past 171, 173, and if the weekly RSI makes a new high, so the weekly RSI, the new high would be above 73.68. If the weekly RSI makes a new high and price goes past 173, 174, most likely this is a 1-2, 1-2 Elliott wave nest. So the minimum expectation would just end up being too conservative, and that would just be that we don't really have this pullback at 171, 173. We just kind of see Apple, do what Microsoft possibly did, or even what Nvidia possibly did. It has a lot of catching up to do, and I think it will. So that's Apple. It gave us a lot of evidence this week. Let's talk about the Nasdaq QQQ. Real quick, this is my second take so you can see what the more aggressive view of the Nasdaq is. Let's talk about the more conservative view. We have a huge wave 1 and a wave 2, and conservatively, this is a big old wave 3 that we went on this summer, and we ended wave 4 during the Evergrande quad witching, BS story this September, right? And this October, we put in wave 4. We're in a wave 5 higher right now. The length of wave 5 should be either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So we've already passed the length of wave 1 placed at the wave 4 low. And we noticed that Microsoft did this a really long time ago. So what we were kind of expecting was that if this is the wave 5, it will be at least the length of wave 3 placed at the wave 4 low. That's going to take the Nasdaq all the way to 416 for a wave 5 target. Now, what I think we could see in the short term, I'll explain on SPY what a short-term pullback could look like. But I think in general, this could be a lot more bullish than what I just said. I think that most likely this is a wave 1 and a wave 2. And given that within this same cycle from the March 2021 low, we've made a new high on the RSI, this is kind of lining up with what we're seeing. We just talked about Apple kind of going to 200, that this could be a nest for the Nasdaq. This is a wave 1 and a wave 2. Possibly, this is another wave 1 and another wave 2. That means the length of this rally placed at this low is just the minimum wave 3 target. Now, a lot of people are going to think, I'm getting too bullish or whatever. In the short term, we're forming a pretty clear 1, 2, 3, 4, 5 waves impulse. I'm hearing stuff like, the market's going to go up forever and all this stuff. And if we're going to go substantially higher, what we probably need is a bear trap. And that's where this possible short-term wave 2 correction could come in. To me, the worst thing that could happen is that we have a wave 2 that retests this kind of wave 1 high of around a 381, 382. I don't even think it's going to get to that, and that's not really my projection. So I am long the market with cash. I'm actually long the Nasdaq still, and I'm hoping for a wave 2 to buy and ride a waves 3, 4, and 5 to the upside. Here's the thing. If this really is a 1, 2, 3, 4, and 5, wave 1, and we buy a wave 2, then wave 3 is going to go way past 416, right? And that's kind of the theme of this video, is that in the longer term, the market is a lot more bullish than we've expected. In the short term, I think people are getting a little frothy. I would love to see a bear trap, maybe a media headline. They'll say the Chinese real estate market actually collapsed this time for real. And then we buy this wave 2, ride waves 3, 4, and 5 to the upside. Just a possibility. It looks better on SPY. Let's look at Google right now. Google had a wave 1 and a wave 2, then a huge wave 3 and a wave 4. This is one of those times. It doesn't really seem like much, but we noticed Google made a new high on the weekly RSI, so we said that probably isn't the top. This is a wave 1 and a wave 2, a huge wave 3 and a wave 4. So the length of wave 1 placed at the wave 4 low pretty conservatively takes Google to 3,323. That's a very conservative wave 5 target, and I think it's going to be hit. So, generally speaking, I think that we have more music playing in the market at least until Apple reaches 171, 173, and at least until Google reaches 3,323. But I don't care about Google. I'm going to be looking at the healthcare ETF XLV. But before we do that, let's look at Amazon. Amazon gave us a lot of evidence, very similar to, Qualcomm, very similar to a lot of the evidence that we got this week from Apple and Micron. This looks damning right now that one of the most important stocks in the market is about to break to a new all-time high. So this looks like a wave 1 and a wave 2, another wave 1 and another wave 2. Says that we're in wave 3 of wave 3 of wave 3 right now. So the length of this wave 1 right here, placed at this wave 2 low, will take Amazon to really a kind of silly target of 3,803. Now, I think we're going to go way past that. But what I'm trying to show is that even if we have a wave 3 that ends at a new all-time high, we look for a shallow wave 4 to retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. All in all, within this cycle from the May low, I think we're going to go on a waves 1, 2, 3, 4, 5 to the upside. That's going to take Amazon to 4,400. I think Amazon could reach 4,400 by Christmas, and I really think it's almost definitely going to do this by the March quad witching date. I think this looks really good. So it's beginning to look a lot like some of these Santa Claus rally stocks we generally see pick up during the holiday season. I don't trade based on that, but that's kind of what we're seeing right now. Here is the S&P 500. It's a 1, 2, 3, 4, 5, a huge wave 1, and an ABC that ended a nice wave 2. Length of wave 1 placed at the wave 2 low is what I've been saying for the past year, gives a minimum wave 3 target, and we were going to look silly calling for tops before SPY reached 460. And what happened? We looked silly calling for tops before SPY reached 460. So this is, wave 3 at work. It doesn't really just get you in good trades, it keeps you out of bad ones. So this is a huge wave 3 in progress. We've reached the minimum wave 3 target, but I think wave 3 is still in progress. This wave 3 is subdivided into wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, and a wave 4 of wave 3 that ended between the 23.6 and the 38.2% retracement. The length of wave 1 placed at the wave 4 low should take SPY to around 500, right? So that looks really good. A 1, 2, 3, 4, 5. Everyone who sold their 401k is going to see the S&P above 5,000. It sounds cruel, but they're going to chase right around this wave 3 ending, and then we're going to have our first substantial correction. That's just a possibility. It's something that I can see, some of these targets right now, even in the short term with the Nasdaq above 400, a lot of people are starting to say really dumb things like QQQ is just going to go up forever. And it's like, okay, let's see if you have that enthusiasm when we dip. But anyway, here is the healthcare ETF XLV. We have a wave 1 and a wave 2, a big old wave 3, and a wave 4 that ends between the 23.6 and the 38.2% retracement. The length of wave 1 placed at the wave 4 low says, why are we even looking at SPY? Pfizer's already broken above this high. XLV's most likely going to break above this high. It looks like the length of wave 1 placed at the wave 4 low conservatively could take XLV around 160. So this is another one of these charts, very similar to Google, where wave 1, wave 2, wave 3, wave 4, what's in 3, 4, 5 months? That March quad witching day, right? So we could definitely see 1, 2, 3, 4, 5 in a huge wave 1 and give an incredible wave 2 buying opportunity in 2022 for a sector of healthcare stocks that pay dividends, right? I don't think the healthcare sector is going anywhere. So that could be a really cool opportunity. Definitely one that I'll take advantage of. Here's Qualcomm. Who's AMD? Who's NVIDIA? We have Qualcomm and Micron ripping right now. I mean, it doesn't get better than this. This is a wave 1 and a wave 2, a huge wave 3 and a wave 4. Go ask some of these bears, what's the bear count on Qualcomm? What's the bear count on Apple? What's the bear count on Google? And what's the bear count on Pfizer? I don't know, but I have a rising wedge on SPY. This is a huge wave 3 and a wave 4. The length of wave 3 placed at the wave 4 low is going to take Qualcomm to 232, and that's pretty conservative. I think that happens by June, possibly March. And we're going to see, more importantly, that Micron, Taiwan Semiconductors, and Intel start to play catch up. That's looking gorgeous. Shout out to the bar chart straddle and strangle screener. This is a wave 1 and a wave 2. Micron, I don't think this is a wave 3 or a wave 4. Do you? I think this is another wave 1 and another wave 2. And with AMD exploding to the 150s, we should look at some of these other semiconductor stocks with a little more aggressive view. This is a wave 1 and a wave 2. The length of wave 1, place at the wave 2 low, says go chase NVIDIA while Micron rips to 121. And this is looking great. I mean, this is huge evidence. If Micron is above this high, there's no bear count here, right? It's a huge base. It shows that large institutions were accumulating a laggard semiconductor for the past 6, 7, 8 months, right? So they weren't really too concerned about the Evergrande scandal or the 10-year yield. So that's kind of interesting, but the length of wave 1 placed with wave 2 low says they're going to ride this minimally to 121. Now, if this is the wave 3, we'll go past the 121, have a shallow wave 4 correction and go on a wave 5 higher. So potentially much more upside for Micron. Here's Taiwan Semis. Taiwan Semis, this looks great. I mean, this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. If I just move the chart like this, you wouldn't really be able to tell if this was Micron or if this was Taiwan Semiconductors or if this was Qualcomm. And you definitely wouldn't be able to tell the difference between this chart and Qualcomm. And that's because it's about to be what Qualcomm just did. In my opinion, this is a 1-2, wave 3, and a wave 4 that ended between the 23.6 and the 38.2% retracement. The length of wave 3, placed at the wave 4 low, says, yeah, we are going to break to a new high. This is a big old base. This is a big old base. The length of wave 3, placed at the wave 4 low, says the large institutions have been accumulating Taiwan Semiconductors and Micron and Intel this entire time while you were reading gossip columns about, Chinese real estate and 10-year yields and, whatever armchair pseudo-intellectual, fundamental story they're giving you. Here's Intel. Intel's looking good. This is a 1, 2, 3, 4, 5, a huge wave 1, and an ABC correction that ended a really nice wave 2 at the 78.6% fib. The length of wave 1, placed at the wave 2 low. We'll take Intel to 73. That sounds crazy, but look at the Micron chart. Look at the Qualcomm chart. Look at exactly what happened last year, right? This gap down was the exact same story of AMD's eating our lunch money, which is weird because we know that birds of a feather flock together. Intel bulls are rooting for AMD, but it was the exact same thing last year, right? Micron and Intel are lagging. Intel has this gap down, says AMD's eating our lunch and explodes. It's going to be the exact same thing this time for me. I think right now we hold above 43. We're at the 78.6% fib, but above 43, there's a lot of upside for Intel. Clear 1, 2, 3, 4, 5 waves impulse. We have an ABC correction. I think the length of wave 1, placed at the wave 2 low. Intel and Micron, very similar to November of 2020, have been on the bar chart straddle and strangle screener. They're quietly lulling us to sleep, but they're both about to follow Qualcomm, in my opinion. The length of wave 1, placed at the wave 2 low. We'll take Intel to 73. Could happen by June, could happen by March, but I think it's going to be very similar to this where all of a sudden, wait a minute, I thought Intel was the laggard. No, it's just the stepchild. It's going to play catch up, just like Apple is going to play catch up to the Nasdaq. Here's the Russell. The Russell very conservatively is a wave 1 and a wave 2, a big old wave 3, and a wave 4. Now, the classical traders might outperform this because they're going to say, what's all that wave crap? This is a huge bull flag. And when you look at the Homebuilder section, the home building ETF in a little bit, we're probably going to agree with them that this could definitely be a huge bull flag, but let's be conservative. I think this is a wave 1 and a wave 2 and a huge wave 3 and a wave 4. So the length of wave 1, placed at the wave 4 low, very conservatively takes IWM to 266. Now, most likely we're going to go past 266. So if we wake up and IWM is above 270, I think that this wave 5 would be the length of wave 3 placed at the wave 4 low. We'd be looking for a pretty important reaction around 308. That kind of sounds wild, but we're seeing this across the market, across the industrials, across the growth sector, that everyone wants to chase some of these large cap names. And it's going to be very similar to the fourth quarter and the first quarter of 2020, where all of a sudden, the growth stocks, the industrials, some of the crypto even is really kind of picking up the mantle. The inflation trade is really an opportunity right now. Not really Nvidia and AMD. They were when I were talking about them a long time ago, though. Here is XHB, the home building ETF. I mean, this is kind of why. Is anyone prepared for this to play out? Like, just genuinely asking, is anyone prepared for this to be a 1, 2, 3, 4, 5, a huge wave 1, and then the home building ETF just ended a big wave 2, right? Because I hear these people, they're complaining about inflation, right? And now the media is giving you all these inflation headlines. But is anyone really prepared for this to be a giant bull flag for the home building sector? No, right? No one's prepared for this. But I really think this is the right count for XHP. This is a 1, 2, 3, 4, 5, big old wave 1. This is a wave 1 and a wave 2. Wave 3 passes the 161.8% extension of wave 1. I wish I could show, but what I want to show more is that wave 5 is exactly the length of wave 1 placed at the wave 4 low. This is a very clean 1, 2, 3, 4, 5 waves impulse. This could be a really short wave 2, that classic bull flag. And the length of wave 1 placed at the wave 2 low could take this home building ETF to 126. So people are complaining about inflation. And I keep saying inflation has not started. 126 could just be the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. Love the upside reward. Above 71, I think if there was a dip in the market, this would be a very attractive buy. Above 71, a lot of upside for this one to at least 126. I want to talk about Nail. Someone asked me about Nail. I normally don't do analysis on the leverage ETFs, but you can use the Twitter advanced search tool to kind of see. Someone asked me about Nail, and I don't usually do the leverage ETFs, but I got this one pretty well. I think this is actually a really clean count. This is a 1, 2, 1, 2 Elliott wave nest for Nail that ended between the 61.8 and the 78.6% retracement. So it looks like we are going to hold this low of about 68 and go on a wave 1, place at the wave 2 low that will take a wave 3 that is at least the length of wave 1, placed at the wave 2 low. That should take Nail to 142, and that just be the minimum wave 3 target. We'd have a shallow wave 4 that retests the wave 1 high, and then wave 5 is the length of wave 1, placed at the wave 4 low. Nail can go to 196. Now, it's a leverage ETF. It's extremely risky, and I honestly think this is best served as a gauge for just how high the home building ETF can go, and it fits in with a bigger theme that materials and industrials and small cap oil, those places that a lot of us have forgotten about are going to be where we find alpha. Here's KBH Homebuilders, one of my favorites, just one of my favorite charts, honestly. It's a wave 1 and a wave 2, a big old wave 1 and a wave 2. We've already seen that Lowe's and Home Depot, they looked identical to this. And then they've already exploded above this high from May 10th. So I think they're acting as a leading indicator right now. I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. We're going to hold above 30 to 35. That'd be pretty tight, but 30 to 35 we'll hold above the length of wave 1, place of the wave 2 low. We're going to conservatively see KBH go all the way to 60 for a wave 3 before a shallow wave 4 that retests the wave 1 high. The length of wave 1, place of the wave 4 low, says waves 1, 2, 3, 4, and 5 can take KBH Homebuilders to 74, and that's very conservative. I think we see this wave 3 target hit in Q1, and honestly, this wave 5 target hit probably even also in Q1, but certainly in Q2, in my opinion. And I think we hold about 35 to 30, and this is a really nice one. I like it. So there's KBH. Here is OIH, an oil services ETF. My plan is just to throw as many ETFs to you guys as possible, but this is a wave 1 and a wave 2, a big old wave 3 that goes past the 161.8% extension of wave 1. So this is also really interesting because if I measure these fibs, I could show you that this wave 4 ends at exactly the 50% retracement, and there's one kind of possibility that most people aren't prepared for, and that is this is a 1, 2, 1, 2 Elliott wave nest. Now, we're not going to know that's the case unless a few things happen. The biggest one is going to be if OIH goes way past 324, then this is a wave 1 and a wave 2. I actually want to take the more conservative view, and I think the more conservative view is the more accurate view for OIH. This is a wave 1 and a wave 2. This is a big wave 3 and a wave 4 that retested the wave 1 high, so wave 5 will be at least the length of wave 1 placed at the wave 4 low. That gives a minimum target for OIH of 272. More aggressively, it'll be the length of wave 3 placed at the wave 4 low, and that's going to be the target if we go past, 272. Let's say if we're past 275, then the wave 5 target will probably be the length of wave 3 placed at the wave 4 low. And then this kind of lines up with XLV, where we go 1, 2, 3, 4, 5, wave 1, everyone chases the market, and then we have our first kind of substantial correction that is an incredible buying opportunity. So OIH looks good. I think right now it'll hold above 164, but what's almost more important is XLE and XOP. They've already broken above this wave 3 high. So, the real invalidation would be if they broke their wave 4 lows. I think OIH has kind of lagged them a little bit, and I think that the oil services ETF is going to maybe outperform XOP and XLE, just a thought. So that's looking good. Here is Farmer Brothers Coffee. This looks really pretty. I love the commodities play. I really do. Right? Everyone's saying the market's frothy. Well, this isn't too frothy. This is a 1, 2, 3, 4, 5, a big old wave 1 and an ABC correction that ended a nice wave 2 right at the 61.8% retracement. I think I'm either going to buy this or Disney on Monday. So the 78.6% retracement, that's 5.47. That's pretty wide. And I honestly think that we're going to get a really nice reaction. I guess that could be the invalidation level. For me, this is more of a buy and hold that I'm probably going to take. The length of wave 1, place with wave 2 low. We'll take Farmer Brothers Coffee to 16 before you have a shallow wave 4 and a wave 5 higher. So the market rotates, the market rotates, the market rotates. You know, I think what we could see, NVIDIA, AMD, Microsoft, they go sideways, and then all of a sudden, everyone's a commodities bull when some of these stocks are way up here. So that could be the case, but I think this looks really pretty. The length of wave 1, place with wave 2 low, says that wave 3 is going to be over 100% from the current level. So my plan would be to sell half at this level, remove the original risk of the trade, and then, you know, let the rest ride to who knows where. So we let price be our guide. Here is GameStop. We'll talk about AMC too. People think this is a joke. We've seen GameStop, we've seen AMC all over the bar chart, straddle, and strangle screener. So we saw AMC make a lot of readings on the screener before it exploded in June. And now we're seeing AMC and GameStop have taken up every single slot, not every single slot for GameStop, but AMC has literally taken up every single slot on the bar chart, straddle, and strangle screener. Like, AMC is going to have the biggest move probably that we've seen in the past 3 or 4 years. It could be to the downside. I don't think it will be. But let's talk about GameStop right now. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. Yeah, I think this is another wave 1 and another wave 2. Now, I am not invested in GameStop. I'm not going to buy GameStop. This is silly, but it's going to happen, to be honest. That we're going to have wave 3 of wave 3 of wave 3. And I think it's going to be a cruel irony that all the people who say, you know, valuations have gotten insane, we have all these Dutch tulips, they're about to see GameStop. Yeah, they're about to see GameStop explode. I mean, to be honest, right? This is a wave 1 and a wave 2. The minimum kind of silly wave 3 target says GameStop could reach 370. That's conservative. 485 is the 161.8% extension of wave 1. So yeah, we could see GameStop double, and that's just a very conservative wave 3 target. And let's see, I mean, if GameStop is ever above this high, then this is a massive base, right? Retail traders weren't keeping GameStop up this whole time, right? That's kind of silly if you even think that's possible, that retail traders were keeping GameStop up this entire time. Large institutions are playing games, and I think this is going to be kind of one of the funny ones. Here's AMC. It's another very similar thing. We've seen AMC, we've seen GameStop all over the bar chart, straddle, and strangle screener. I think they're just going to do this cruel irony where they have all the people who are, you know, quote unquote smart and responsible say that valuations are too high, and then all of a sudden GameStop and AMC explode. I'm going to get a big kick out of that. But this is AMC. I think it's a wave 1 and a wave 2. And as crazy as it sounds, this is conservative. That this is a wave 3 and a wave 4 because this is that dramatic ABC correction. It's a 61.8% retracement. I mean, this could get really explosive. And I think right now, AMC actually will hold above 28.91, and AMC and GameStonk can really, it sounds funny, but they will. They're going to take the market by storm. This is a wave 1 and a wave 2. I mean, wave 3 takes AMC to 67 before a shallow wave 4 and a wave 5 higher, and that would take AMC to a new all-time high. And then there's not really a price target that I can give you. To be honest, I'd have to see, but it looks like the writing's on the wall. AMC will hold above this low of about 28, and it will go break above this high of about 72. And if GameStop and AMC, you know, break above these highs, it will literally be an insane breakout, and I'm gonna have a kick out of it, to be honest. Here is Premium Resources. This is a big old wave 1 and wave 2. This is a metal miner. So the only reason I'm talking about this is because if I moved this right here, you would not be able to tell the difference between PVG or Pan American Silver or, you know, Goldfields GFI or GDX or GDXJ. You would not be able to tell the difference between this chart and any other gold mining and silver mining chart. I think PVG is acting as a leading indicator. The length of wave 1, place at the wave 2 low, will take Premium Resources to 18. That's conservative. We'd have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1, place at the wave 4 low, can take Premium Resources to as high as 24, right? So, you know, I don't even care about Premium Resources. I care that it's broken above this wave 1 high. It's been the first, really only the only one that has exploded above this exact same kind of high from 2020 that every single gold miner and silver miner forms. I believe it's acting as a leading indicator. My silver miner of the day is Pan American Silver. I really like this one. Kind of a large cap name. Kind of a more respected name in this. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 for Pan American Silver. The length of wave 1, place of the wave 2 low. You know, we're going to see, I think 21 holds. I think Pan American Silver goes to 51. And I think 51 gets hit pretty 51 could definitely be seen in the first half of 2022. I've always said I think that the silver and the gold miners are much longer term plays. So, but I do think that we could see a pretty explosive breakout for the silver miners. I'm interested in them as a buy and hold. I'm not interested in Pan American Silver as really an option trade, because I do think that, this could continue to consolidate for a while, but we have seen pre-10 resources break above this high. I think we're going to see the length of wave 1 placed at the wave 2 low for a lot of these silver mining names takes, them on this big thrust higher. That equal legs target for Pan American Silver is 51. We'd have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 placed at the wave 2 low, the length of wave 1 placed at what would be the wave 4 low could take Pan American Silver all the way to 70. So I'm a big believer in diversification. Let's talk about the Palladium ETF. I didn't really plan to talk about this, but remember, one thing that we always talked about was this idea that in the kind of the ETF summary, it says that Palladium has a very direct correlation with inflation and economic activity. So if the economy is booming and we're kind of inflating, then that's really good for Palladium because it's a very industrial metal that is in the ETF report. So this is a 1, 2, 3, 4, 5, a big old wave 1. This is an ABC correction wave 2 that wicks at the 78.6% retracement. The length of wave 1 placed at the wave 2 low should take Palladium all the way to 314. That's the minimum wave 3 target. We'll have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 placed at the wave 4 low could take Palladium to 423. And that is really fitting in with a lot of what we're seeing, that inflation is just getting started. That's what people don't understand. We're not at the end of inflation. This isn't transitory. This is the transition to really a monetary kind of phenomenon that we haven't seen in the United States. And we think that this is impossible. But we're about to see what's going to happen to the dollar. Here is Nokia. Nokia is another one of these meme stock. It's on the bar chart, straddle and strangle screener. It's at 0, very close to 0% implied volatility. I think this is another one where everyone's going to say, hey, the market valuations have gotten insane. And then while Gamestop's exploding, AMC is exploding, Nokia is going to be exploding too, except Nokia isn't a meme stock, right? That's the greatest trick the devil ever pulled, was convincing you that Nokia is a meme stock. Nokia is not a meme stock. It is a giant. It is a giant. And I know that because Deutsche Telekom and Nokia look very similar. They're both breaking out a 10, 15, 20-year basis. We're looking at, AT&T potentially being a massive base, but Nokia, the 5G stocks, right? They want you to think this is a meme stock. This is not a meme stock. It was a much better entry below 4 when I said Nokia below 4 was a gift, but the length of wave 1 placed at the wave 2 low, I still expect it's going to take Nokia to 11. I honestly think this will happen in the second or third quarter of 2022, that Nokia goes all the way to 11. I am more interested in Nokia as a buy and hold, but I do think it holds above 3.75, starts heading to 11 for a wave 3 target. We'll talk about potentially afterwards if that happens, but be on the radar. Do not get distracted by meme stock season because it is coming. Here is Disney. Man, people say the market is frothy. Sometimes the market gives you a softball, right? But if you have beer goggles on, because the media is always telling you stuff, you're not gonna hit it. And Pfizer in the 30s was a softball. And this is really kind of the biggest softball of the year, besides Boeing at the current levels, is Disney right now, right? Disney in the 150s reminds me a lot of Pfizer in the 30s, right? This is a no-brainer to me, right? And that's obviously my unprofessional opinion, but, we're going to regret not buying Disney or Boeing or Pfizer because of whatever reason in years to come. I'm quite certain of that. This is a 1, 2, 3, 4, 5, a big wave 1, and an ABC correction that ended a huge wave 2. The length of wave A placed at the wave B high is where wave C ended. It sounds silly, but this is my favorite place to enter trades. The length of wave 1 placed at the wave 2 low will take Disney to 278. Now, we have to have a risk management level. So I think the 50% retracement is 141, but realistically, I'm probably going to buy Disney, and if it goes lower, I'll be really happy about it. I don't think we'll ever fill this gap. I think this is going to be one of those unfilled gaps, and when you don't fill a gap, you go retest the gap, but you don't fill it, that's when you can see these really explosive kind of bases when we turn around. So I think Disney's going to be one of them. The length of wave 1 placed at the wave 2 low is going to take Disney to 278. So that could happen, 6, 7, 8 months out, but I'm really more interested in Disney as a long-term hold. Sometimes failed trades can become long-term investments for me. I think Disney's a good example of that. Here's Tesla. We talked about Tesla a lot yesterday. But a lot of this evidence that we're talking about, we'll stick with the conservative view. This is a wave 1 and a wave 2, a big old wave 3 and a wave 4. So we're within a large wave 5 right now. We don't really even care about this large, cycle because we have enough information just within the cycle from the March low. This looks pretty clearly like a wave 1 and a wave 2. Wave 3 explodes past the 161.8% extension. This is that exact same rule we talked about. A new high on the RSI means we can't label this as a wave 3. We went way past the 161.8% extension, so we weren't going to anyway. But this is a wave 1 and a wave 2, a big old wave 3, and a wave 4 that pulled back to the 38.2% retracement. So wave 5 can't be the length of wave 1 placed at the wave 4 low, because then Tesla wouldn't make a new high, right? Wave 5 has to make a high above wave 3, and I think that's where we're going to see wave 5 be the length of wave 3 placed at the wave 4 low, and that means that we're going to go past my target of 1368 to 1400. We're probably going to go as high as 1680. So the target is still 1368 to 1400. I designed my post in July so that a non-existent shareholder could sell half when they were up 100%, and make this risk-free just in case this is a 1-2-1-2 Elliott wave nest. So shares for me are very similar to options. I buy an even number. So if I'm up 100%, I can sell half and let the rest ride. So I designed the Tesla post so that a hypothetical non-existent shareholder could sell half when they were up 100% at 1368 and then let the rest ride in case this is a 1-2-1-2 Elliott wave nest. Because in that case, 1368 would be the minimum wave 3 target. We'd have a shallow wave 4 correction and a wave 5 higher. So Tesla looks good. NextEra Energy, this is great. I mean, we saw so much great evidence, right, this week. So I don't want to bury the lead, but this is great. We just saw NextEra Energy break out to a new high, right? The same January 25th high that we've been talking about. I literally have a post about how NextEra Energy, First Solar, and Tesla all formed the exact same January 25th high. I said in the beginning of September that they were all going to break it, and it looks like NextEra Energy is doing that. The length of wave 1 placed at the wave 2 low is going to take NEE to 92 before a shallow wave 4 that conservatively retests the wave 1 high, and a wave 5 that is at least the length of wave 1 placed at the wave 4 low. So NEE should go all the way to 102. Let's see what else we have on the agenda. Enphase Energy. We'll talk about Enphase Energy. We'll talk about the solar ETF TAN. Enphase Energy keeps building on this breakout, and it's starting to support the idea that this is all a huge wave 1 and a wave 2, but really, we don't even really care about that. We have an ABC correction. We have a wave 1 and a wave 2. So this Enphase Energy is a huge holding of TAN, and it's a huge holding of ICLN, and both of those ETFs are still below the first quarter high. I think there's so much writing on the wall that two of the best opportunities might be clean energy ETFs like ICLN and ACES and TAN that hold Enphase Energy and First Solar, but they haven't broken that exact same first quarter high yet. So NextEra Energy, Enphase Energy, and First Solar and Tesla, they're all leading indicators that there will be laggards in the clean energy space that do very well. So we have a 1, 2, 3, 4, 5, a nice wave 1 and a wave 2. This is clearly a wave 3 because we've gone past the length of wave 1, placed at the wave 2 low. So this looks good. Eventually, this wave 3 will end, and we'll have a shallow wave 4 before a wave 5 higher. I want to keep my conservative view continued to be on the chart. That if we held above 128 with the tighter stop being 144, then Enphase Energy is within a wave 3 right now. It'll have a shallow wave 4 correction before a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 will take Enphase Energy all the way to 310, and very unlikely that the stock market crashes during that time, very unlikely that Tesla crashes during that time, and very unlikely that the solar ETF TAN doesn't really kind of do something great, and I think it will. I think the solar ETF TAN and ICLN are going to follow Enphase Energy and First Solar. It's kind of there's a preponderance of evidence of this. It's almost a math equation, but this is a wave 1 and a wave 2. I think we're going to hold above this low for TAN of 75. So we're going to go pretty cleanly to the 161.8% extension, which is 109, before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low should take TAN all the way to 128. I want to talk about ICLN real quick. It's a very similar view. But again, if TAN is going to 128, right, I probably wouldn't be selling Tesla during that time. And if we look at the ICLN chart right now, it's almost identical. I think this could be a nice opportunity. It's a wave 1 and an ABC wave 2 that ends at the 78.6% fib. We have this very impulsive wave 3 that is in progress at least to 26 before a shallow wave 4 and a wave 5 higher. All in all, ICLN has a lot of upside to 28, but that's kind of burying the lead because on the bigger degree, ICLN could be a much longer term opportunity. This is a wave 1 and a wave 2, a big old wave 3 and a wave 4. So The length of wave 3 placed at the wave 4 low is the wave 5 target. Now, we talked about in my video last night how normally wave 4 forms a bull flag and how a lot of the clean energy, a lot of the growth ETFs in general, they don't really form this sideways triangle bull flag that we normally see for wave 4. They have this dramatic kind of wave 2-ish correction. So this could certainly be a 1-2, 1-2 Elliott wave nest. We don't really need to be that aggressive right now. Even if we're calling this a wave 3, we expect the wave 4 low will hold. We'll go on a wave 5 higher. There will be at least the length of wave 3 placed with wave 4 low, and ICLN in 2022 can hit 46. It can double. It really can. So I am long ICLN leaps. They're hedged with kind of April puts. But anyway, I'm long ICLN. I think it's going to do very well. Here's Twitter. I think this is a really nice gauge for the kind of market right now, or at least the growth side of the market, because this is a pretty clear setup for Twitter. A wave 1 and an ABC wave 2. Then we have this big old wave. Now, conservatively, this is a wave 3 and a wave 4. So we talk about normally wave 4 is a bull flag, and the dramatic 3 swings is another wave 1 and another wave 2. It doesn't really matter right now if the length of wave 3 placed at the wave 4 low is the minimum target for wave 5. We're still going to see Twitter reach 109. Now, let's talk about a scenario where Twitter goes a little lower than the 50% fib. Now, if Twitter goes lower than the 50% retracement, then I want to see it, between 39 and 47 have a pretty explosive reaction. And if it got between 39 and 47, I wouldn't be calling this a 1, 2, 3, 4. I would be calling this a 1, 2, 1, 2 Elliott wave nest. In the short term, it's the same expectation. The length of this rally placed at this low will take Twitter to 109, but that would be the conservative wave 3 target. We'd have a shallow wave 4 and then a wave 5 even higher than that. So 38, 39 would be a little wider, level for that kind of more aggressive nest view. But I think Twitter does a really good job showing it's pretty clearly in an impulse, and a lot of the growth stocks, the rain is going to stop. We're going to see the rainbows in Cathie Wood's arc pretty soon. Here's Litecoin. Litecoin looks really good. I'm long Litecoin. This is a wave 1 and an ABC wave 2, a wave 1 and a wave 2, and yes, another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low, the wave 2 low that ended at exactly the 78.6% retracement of 107 will take Litecoin all the way to 500, 494 to be exact. I think this is a 1-2 from this low. So if we're above this low of 140, then Litecoin has a lot more upside. If we want it to be really tight, it looks like this is a wave 1 and a wave 2 that is formed for Litecoin on a super small degree. So what we can say is we're going to have a pretty nice reaction between the 61.8 and the 78.6% fib, and then a little tighter stop could be this low of 173, but I think Litecoin looks really good. I think this is getting ready to blast off very quickly, to be honest. I can see it doing well this weekend. Here's Riot blockchain, right? People want to know, where's Bitcoin going? There's no way Bitcoin can go higher. And it's like Bitcoin is no different than Tesla. It's no different than Apple. It's no different than the stock market. You can't just look at Bitcoin. You have to look at the entire market as a whole. Ripple and Litecoin have not, broken the 2017, 2018 high. Riot blockchain has a lot of work to do. So Riot blockchain has moved step for step with Marathon Patent Group since we have known Riot blockchain. It has moved dollar for dollar with Marathon Patent Group. That relationship did not just end. I think this is a wave 1 and an ABC wave 2. We have already seen Marathon Patent Group explode above this wave 1 high and then had a pretty nasty pullback. I think what that could be is that some of that money is flowing out of Marathon Patent Group. It's flowing into some laggards. And I even think kind of to build on that, some of the sell-off that we're seeing in crypto in general is probably money flowing into altcoins. But just with Marathon Patent Group, it has exploded above this exact same high, right? So if you think Riot blockchain exploding above this high is crazy, well then congratulations. You thought Marathon Patent Group going to 75 and 80 was crazy too, which a lot of people did. But I think we're going to hold this wave 2 low right here of 23. It's a little wide, but this is a pretty nice nest right here. The length of wave 1 placed at the wave 2 low should take Riot blockchain all the way to 98. So I think we're going to go to the lower bound of the pitchfork. It looks like we're making a run at the lower bound of the pitchfork right now, and then eventually to the median. So this is really explosive. It's very unlikely that Bitcoin or Ethereum or Litecoin or any really cryptocurrency related vehicle is crashing while Riot blockchain heads to 98.